Welcome back, Math 10. We're going to do our second lesson of our three lesson financial literacy unit. We're going to talk about the deductions. And sadly, yep, the government takes their piece. They're going to take a chunk of your money no matter what. You can't find a way around it. If you try to, it's illegal. So we're going to talk about here's a little sample pay stub for somebody. The names have been crossed out here, just showing their pay and some of these deductions, and you can actually see their net pay. So key numbers here I want to point out with my mouse is there's their regular pay of 1,880 and 77 cents, and then these deductions all come off, and we can see their actual net pay down here in the bottom right, net pay being after deductions. So current total, deductions are subtracted, and there's the net pay. That's the actual amount they took home after this particular pay period. So let's talk about these deductions. I'm sure you've heard about them, but specifically, let's define what the heck is net pay. So net pay is the amount you receive after deductions. That's this number right here, and have been taken off your gross pay. There are many deductions the government requires to be taken off your paycheck, and here are the most common. So we got CPP, that is short for Canada Pension Plan. Canada Pension Plan. And the Canada Pension Plan, this provides income after retirement. We all get it when we retire. It's not a lot of money. It is not enough to survive on solely. So you want to be smart with your money, make investments. Maybe also, like as a teacher, I also have a teacher pension plan, or RCMP. They have an additional pension plan. Stuff to think about as you choose your career. But your employer must also make a contribution on your behalf. If you ever become an entrepreneur, run your own business, and have employees, you'll learn all about that. And in 2019, the numbers we're going to be using is just when these notes were created. It's gone up a little bit, but not much. The deduction was 5.1% of gross annual income. Now, exceeding the first 3,500. So the first $3,500 you own or you make. So if you had a small part-time job, you would have not paid any CPP. So you have to go past this $3,500 mark. Now, what that means is the maximum annual CPP contribution was at in 2019 again was $2,748.90. So after the 3,500, you start making more money, you start paying CPP, and once you pay this much CPP for the year, you do not pay any more. So what this means, if we do the math in reverse, anybody making over 57,400 is what it works out to be, or more annually, has this as their annual CPP contribution. So they will not pay more than this 2748.90. Okay. Once you go over that, you stop paying this 5.1%. You get to keep it. Okay. And this is only paid by employees 18 years or older. So you're not paying CPP yet, based on how old you are. EI, this is a very commonly used by everybody at some point in their life. This is employment insurance. Okay, it's mandatory. You don't get to opt out of this. Now, this provides income during periods of unemployment. So this is caused by no fault. You can't get fired and collect EI. This is usually for when you're laid off or you're a seasonal worker. I collected EI for two different reasons. I collected EI when I was working in landscape, and I was laid off in the winter, and another time when I had a medical EI. So there's different forms, and another one really common is maternity benefits for women when they have their babies. So usually you need to have accumulated 420 to 700 hours just to be insurable. So you got to work enough to collect this money in a 1 year period. And your employer must also make a contribution on behalf, just like CPP. And now EI contributions are a much smaller percent. They're only at a rate of approximately 1.62%. Again, this is 2019 numbers of your gross income. And the maximum annual EI contribution premium is only $860.22. Okay, so a lot lower than CPP. There is no initial amount that you have to exceed, like the 3,500 here. That doesn't exist with EI. Okay, so we don't need to worry about that 3,500. So with EI, if you make over, if we do the math on this one, $53,100 approximately, you would have paid that 1.62% of that is $860. You've paid everything. Every dollar you make over this, you will not be paying EI. You will have maxed out your contribution, and that's that for the year. All right, let's tackle a question to look at Michelle's gross income and what she pays for CPP and EI. Okay, so she gets this bi weekly. We're going to calculate her deductions for each of these pay periods. So to look at CPP, everything has to do with annual. Okay, so we have to convert this bi-weekly to annual. Remember, this is every 2 weeks. So we got to take this 1,400 and times it by 26 essentially to get her annual income. So that's what we're going to do first with this question. We're going to take and see if she's over the max. Okay, we don't know what she's making for the year. So we're going to take first the 5.1% that we wrote on the other page of her total income, which we know. Oh, I should write this up here. Find her annual income. That's what this box is right here. So we'll take the 1,400 and we're going to multiply, I knew it was somewhere, by the 26 pay periods being biweekly, and her total income is 36,400. Now remember, we have to take off the first 3,500 here. So 5.1%, not of 36,400, but we got to take off this 3,500. You don't pay CPP on it. So we're going to take her income, which we just wrote above. Her annual income is 36,400. And we're going to subtract the 3,500. Okay. And when we do that, we're going to be able to see if she hits her max. Okay. Which we know just by looking at the number we wrote here, you have to be over 57,000 to reach the max. So we know she's not going to hit it, but I want to show the math here. So 5.1%. Again, let's move the decimal. So 0.051 multiplied by, and if we subtract those, we're going to get 32,900. 32,900. And we multiply those two together and we get 1,677 and 90 cents. Okay, so we can see that that contribution does not exceed the maximum here of 2,700, obviously. So does not exceed the max, or not over max. Okay, so now we can actually calculate this CPP, and all you have to do is take this annual contribution and divide it by the 26 pay periods. So we're going to take that amount, the 1,677 and 90 cents, and we're going to divide it by the 26 pay periods to figure out how much she pays every 2 weeks. So in this case, she's going to be paying $64.53. And that, of course, is bi-weekly, every 2 weeks. All right, EI is a little bit easier. All we have to do is check the max here. We don't have the 3,500 portion that we need to worry about. So this is at, again, a rate of 1.62% of the gross income. And we have to take, again, the annual amount, which is 36,400. So we take that decimal, move it over twice. So we get 0.0162 multiplied by 36,400. And that's going to give us a grand total for the year of $589.68. And again, this is not over the max. Okay, recall what was the max? Just up here, our max was $860.22. So we're below that. So again, all we got to do is take that annual payment, okay, and multiply it, or sorry, divide it, because that's an annual amount being paid into EI. We're going to divide it by the 26 pay periods. And that's going to give us a total of just $22.68. And again, bi-weekly. Okay, Let's talk about income tax. Okay, so income tax is a large part of the money that gets taken off your paychecks. Okay, this is revenue for the government to pay for services, typically roads, health, education. It pays my salary as a teacher, pays CEAs, everybody in the school district. Security, that's your military and army and all that, the Air Force and so on. Okay, so we got to pay for all of these things plus all the government employees. Now, this is only done on what's called taxable income. Okay, what's taxable income? So this is income that is used to calculate the tax owing, and it's found by taking the gross income and subtracting any qualifying deductions, such as contributions to retirement plans. Okay, these can be RRSPs or RPPs, union professional dues, like I pay into those for teaching. So they're not going to deduct; they're going to take those off before your taxable income. And for our purposes, we don't need to deal with too many of those. All we're going to be looking at here is we have our two rates, and these are called tax brackets. Okay, so these are called tax brackets. So here's a tax bracket, another bracket, and so on. And so that we always hear about, tax the rich or the rich get taxed too much or etc. So how it works is on your first approximate 47,000, you pay the Canadian government, the federal tax, 15% of every dollar you make. So every dollar you make, you give them 15 cents. And then it goes up to 20.5% on this next bracket of about 47 to 95 grand, and then to 26 for the next bracket, 29, and then finally the maximum you'll ever pay is 33% on any income exceeding $210,000 approximately. Provincial is very similar. We'll see the rate is much lower because you're only paying for a province, not the entire country. So these rates, again, and these brackets do fluctuate every single year by the dollar. So this is just for 2019. Okay. So after taxes have been calculated, the amount will be reduced by tax credits. Now, we're not going to dive into these tax credits, but everyone receives a basic personal tax credit, and currently that is $12,069. And that just means that you won't means that you could make this much before having to pay any federal tax. Okay, which is nice, but there are a bunch of other tax credits that can lower the taxes you pay. It could be to do with medical disability. It could be to do with post-secondary education, like tuition costs. If you have children, there's lots and lots of different things that are tax deductible, but we are not exploring that in this course. That is far too many topics to cover. Okay, so let's cover a couple questions and look at how we can calculate these. We're going to do a two-parter. We're going to look at the federal taxes being taken off Steve's checks and also the provincial taxes. So we got to look at these in each bracket. So Steve here, first we're going to focus on just the federal tax. How do we actually calculate this? All we're doing is percentages of dollar values again and adding them up. Really easy. So he makes 90 grand. So we see that the two brackets we need for Steve is the first bracket on the first 47,630, and then we're only going to do the second bracket here for anything exceeding that because he doesn't go over 95 grand. So we don't need to worry about these other tax brackets in this question. So let's set it up. So first, we're going to have we're going to do the 15% over here of the first 47,630. That number's coming right from there. Okay. Then we're going to be adding on the next tax bracket, okay, which is at 20.5%. So 20.5% of his remainder. So his remainder, that's easy. Let's take his $90,000 there. Okay, and subtract what he's already been taxed on, which was $47,630. And then we're going to add those up. Okay. So again, let's do some translating. We're going to move that decimal 0.15 multiplied by 47,630. And then we're going to add that to move this decimal over 0.205 multiplied by, and if you subtract those, you're going to get 42,000. 370. Okay, and let's do the two multiplications and then add. So each one of these we multiply, we are going to get 7,144.50. And then we're going to add the other portion, which is 8,685 and 85 cents. Again, always rounding to the nearest penny. And that's going to give us a grand total of, adding those up, we get $15,000, 830 and 35 cents. That is going to the Canadian government, the federal government. So there's his federal tax because we had two brackets to do there. Now for provincial, let's take a look. Let's switch to blue. We're going to see that, okay, so I have to include this bracket. Okay, because that's the first 40,000. Then I have to include the second bracket, but this only goes up to 81,416. So I am going to have to include a third bracket for the final remaining piece at 10.5%. Okay, so let's take a look at what that looks like. It's going to look just like this, except there's going to be 3 percentages instead of just 2. Okay, let's work it out. So first, we have the first tax bracket, which is 5.06% of the first $40,707. Again, that comes from, I got to scroll up here, right there, the first 40,707. All right. Then we have to add on the next tax bracket, which is at 7.7%. Taxes go up. And this time it's of that bracket in between. So we're going to take the two values, the 81,416, and subtract it. We need the difference, which is where this value, 40,707. So this is going to get the next chunk of income. Again, these numbers are coming right from here, okay, to get that amount of money. And we're going to have to add on one more, which is the remainder. So I'm going to try, I hope I can squeeze this in. This is going to be at 10.5% of, and we're going to subtract again. Now this time we are going from the total, which is $90,000 in revenue, of income, and we're going to subtract the 81,416. Okay, so there's our 3 brackets. So if I were to, you don't have to show these brackets, but here's the first bracket on that first chunk of income, the second chunk of income, and the third chunk of income. Okay, let's do some math. So 0.0506, moving that decimal over twice, multiplied by 40,707. And we're going to add that to here. We have 0.077 multiplied by, and if we subtract those, we're going to get 40,709. Okay. And then finally, the third bracket here is at 0.105, the 10.5% multiplied by this remaining piece, which is about 8-9 grand. So we get 8,584. Again, I'll put those in brackets just to show where they came from. Okay. All right. Now let's do the 3 multiplications. We have a multiplication here and here and here. So we're going to do those 3 multiplications. Let's change to red, I think. So we multiply here first, and this amount of tax is going to be a total of $2,059.77. And then we're going to add this next portion here, which is $3,134.59. And the last portion is just the remaining $901.32. Add those all up, and we'll get our total of provincial income tax, which is $6,095.68. All right, so here we go. So we had Steve here, His federal taxes, he had to pay. He made 90 grand, and he had to give the government of Canada 15,830 and 35 cents, and he had to give the BC province $6,095 and 68 cents. And that concludes this lesson. So we can see all we are doing is percentages of income, just making sure we take the right bracket or the right amount of income. And so we were able to see, how do we pay CPP and EI? How are they calculated? And how is provincial and federal income tax calculated? That's it for all. We'll see you in class.